Hi everyone, it's Harun from harunkola.com. Thanks so much for watching this video. Today I have with me once again Rob Wilson from BitScan, and he's going to talk to us about how to set up and read the price charts for effective Bitcoin trading. Hi Rob.
Hello mate, nice to see you again.
Nice to see you too. Thank you so much for joining us, and I'm sorry to cut into your supper time.
Not a problem. Not a problem.
At least you can enjoy wine while you're talking us through this.
Cheers, guys.
Cheers. Thanks so much, Rob. So I hand over to you, Rob, while you're enjoying a glass of wine. Teach us how to read the Bitcoin charts, please.
Okay. So, well, look, I think I need to level with people and say that whilst I've always liked the idea of trading, like most of us, I came into technical trading through the route of using indicators that are based on price action. So, if I were to say that I used moving averages, I used stochastic oscillators, and I've used most indicator-based systems to trade technically. But the penny dropped for me about 4 years ago now, really. And the problem I was encountering was that I was prone to second-guessing my own indicators, and I don't know whether that was whether that's a problem for everybody. I suspect it is a problem for more people than would care to admit it, but it was certainly a problem for me. And so it wasn't so much that I was building a trading system on thin air or on poor data, but my execution was worse than my testing, and so I wasn't seeing the results over time that I had anticipated I would see. And that was basically down to the fact that I wasn't executing on a system as consistently as I perhaps ought to have been. So I made the decision to simplify what I was doing and build something that was as simple as possible. And so I went right back to the very basics of market theory. And by that I mean, I started to read about and understand what is happening beneath the chart. What is actually happening in any market, let alone the market. Not necessarily the market I was looking at on my chart. To understand, what mass psychology was doing, or what it is prone to do in any market, and what that might tell me and help me to build in terms of a trading system I could use. And when I started to view the market in those terms, it became obvious to me that the best setups and the most consistent setups for trading become obvious and become the most tradable when you view the market vertically. What I mean by that is that you genuinely accept that price is king. That sounds like so basic, and it is really. I mean, there's nothing clever about it. But let me give you, for instance. I don't know who does the food shopping in your household, Harun, but whoever that person is, whether it's you or your partner or whatever, they know instinctively after a period of time when something is cheap and when it is inexpensive. They don't need, whoever does the shopping in the house doesn't need a price chart to determine when it's a good moment to buy a certain vegetable or a certain kind of meat. Right? I mean,
Is that just because you like watching the price as often as you can? You're always buying it, so you know when it's cheap and you know when it's expensive.
That's right. So you get a feel for the way that market is, right? So you know when to, a trader of leather goods knows when his raw material is cheap to buy, and he knows when the market is going to give him a good price. I mean, the longer you spend in the market, the better you intrinsically understand what constitutes a bargain and what constitutes, a good price to sell, right? When the market is good for buyers and when it's good for sellers. And it sounds crazy, but when you bear in mind that most of us come into financial trading through a chart or through someone who would offer us a bank of indicators.
Sorry, Rob. Can I just stop you there for a sec?
Yes.
Something's gone very weird with the sound, and I've been trying to figure it out on my side. Could you just check on your side if there's anything? It's around about like 2 minutes ago, something just happened, and your voice is coming out a bit blurred. I thought it was on my side, but do you mind just?
How is that now? Is that better?
There's still this hum. There's still this like background hum that kind of like creates a distortion on your voice. I can hear because I have speakers, but yeah, it's weird.
How about that now?
I think we'll soldier on as best as we can, and if there's anyone that's watching that has any problems, we'll try and fix it then. But I can hear you. It's just that it's not as crystal clear as it was when we started.
That's really curious. There's nothing. I'm not running anything that I wasn't running before. The microphone is now a long way from the screen.
It sounds like there's just some entity or something that's wanting to be like involved, some electromagnetic entity that's joined us in this conversation. And I don't know. Hopefully, it will just buzz back into clarity. It's not a plane crash. We can hear you, and it seems to be like one of these unknowable technical problems. But like I said, we can definitely soldier on.
Yeah, I've literally got no equipment in this room, bar the computer and the. Yeah, sorry.
Thanks. No worries. Please go ahead. Okay. Sorry for the interruption.
So yeah, so there I was trying to understand how to trade, and I couldn't develop a system until I felt I couldn't develop a system until I understood how the underlying market was working. So this sort of journey led me right back to a raw price chart, right? And so now I'm looking at a price chart with nothing on it at all, absolutely nothing, and trying to size up that market and understand the underlying psychology driving it. And what I discovered really is that the best setups come against vertical price points that the rest of the crowd, for whatever reason, sees as significant. And that's again, it's another glimpse of the blindingly obvious. But hey, this was my discovery. And as I'm trying to explain that to you now, the analogy I tend to use is that if you were to find yourself in a shopping mall with an exit at either end, and you were watching down on that shopping mall, and I was standing next to you, Haroon, and I said, well, are more people going to go out of the exit on the left, or are they going to go out of the exit on the right? You would have no way of knowing, how that might happen, right?
Mm-hmm. Okay. Yeah.
Or even when it would happen. When a fire alarm goes off, or if a fire alarm were to go off, you still don't know which way they're going to travel, but you know that something's going to happen, right?
Yes.
When the market hits a price point which is historically significant, you don't know what's going to happen, but you know that something's going to happen, right? Does that make sense?
Okay, that makes sense. Yes.
Well, if you enter a trading, if you enter a tradable market with that perspective, it doesn't make sense to risk your own money in that market at any other time than when the fire alarm is going off. That has to represent, if you think about it, that has to represent the best potential bargain. Because whilst you don't know what will happen, you never know whether you're going to be right or wrong, you know that something is going to happen. So, I see you looking a little bit confused there, but...
No, I think what you're telling me is that there's certain times to be in the market, and that's when it's like coming to the historical or traditional price points, which traditionally something has happened there. And you don't know what's going to happen, but you know that something big is going to happen there, because previously in the past it has happened. And you're getting into the point at that time because that represents the greatest wholesale or the greatest opportunity that you could make a profit. You could make a loss.
Yes, that's it. So now we get to another bit. What it essentially means is that if you are wrong, you're going to find out very quick in terms of price movement. Yeah. If if this market. Let's get to the sort of the Bitcoin market. The reason I was advocating around 540, 550 as a buying position is because we knew that was historically significant. That was a significant important price. So our expectation was that the market, having traded through it, would come and have a look at that price point. We didn't know that it would hold, but we knew that there was a fire alarm going to go off at that point. We knew that there would be orders there. We knew that there would be a battle between those who wanted price to go up and those who wanted to go down. So we knew that the volatility and the energy was going to be at that point. If we had traded down to 540 and carried on to the south, it would have been very quickly obvious, 530, 520, that this trade is off and we're out of the market. Our stop loss clutches in. We were wrong. Fair enough. If we are right, we catch the turn point, and boom, we maximize our reward and we minimize our risk, and that generates what is called the best trader's equation. It represents the best risk to reward ratio.
Okay, so that makes sense to me.
So this became the premise or the foundation of the way I started trading the Forex market. And actually, when you backtest that system, what you find is it achieves something like a 6 times in 10 or 6, it's 60% profitable, right? So that means that, more often than not, but only by a margin of 10%, a point in price which was historically significant on the time scale that you were viewing the market through, and that's key, will be significant again. If it were profitable 100% of the time, the market would never move, right? It would just bloody, oscillate between 2 points. So when you backtest that, and Bitcoin will be absolutely no different, you find that roughly 6 times in 10, historical price points are significant. They represent significant opportunities to catch the reversal point of a market swing, and that's all you need as a trader. Okay, what you must do, having established that, is trade at those points, and you're going to be successful. And that should make you smile, because that's all any trader really needs, right? If you're winning more often than you're not, and your wins represent more than your losses, that's it, it's game over.
Okay, can I ask you a question?
The mistake that many traders make coming into this game is that they feel that their ability to spot a market move is the key to success, and that's absolutely wrong. And that's really hard for a human being, because right from birth we're told that being right equals reward.
Okay.
The problem with that philosophy is that if you're seeing something on your chart, so is every other bastard.
Yes.
Success in trading is having the courage to take measured risks when others wouldn't.
Okay.
So let's go to a chart, and I'll try and show you, what I mean. Okay. So what we can do is we can start, if you like, with with my Bitcoin chart, but we can build it up from nothing, and we'll use TradingView because that's a great piece of software and it's free for everybody. How does that sound?
That sounds perfect. Thanks so much. That's exactly what I was hoping for.
No problem. Okay, so let me come away with this one. Screen share. Boom.
Okay, it's almost seeing you. It's loading up. There we go.
Okay, so what you're looking at here is a 4-hour chart on Bitcoin. Okay. So
Okay.
it really doesn't matter where we start. Whenever I look at a market, I'm always, I like to practice and re-practice sizing that market up from scratch. So certain things stand out for me. I always start just by putting horizontal lines on the market so I can understand where these key price points are. Okay, so I'm going to put my first one down here on the left, where you can see these instances of. Do you see that? Where the price keeps testing. I think the level here is 423.
Okay, yes, I see that. It's tested 423 a few times.
Down there, it's reversed. So these are, having seen it once, this would be a good place to buy, right?
Yes.
Yeah. So we're just going to go on there and mark these on. And I'm not going to be too worried about scale, but you can see as I scale up and down that what's significant now, a funny old thing was significant in the past. So if I look over to the left here, I can see that this area was significant. And you see this price level here is at 514.
Yes, it hit 514 and then it swung, it went down.
Okay, so 514 is for whatever reason significant than before. So when the market starts rallying above, was it 460?
Mm-hmm.
When I think we called our initial sort of buy was around 450, wasn't it? So so we called an investment grade buy at around 450, I think.
Okay.
When the market comes above 540, we know that 514 is on, right? We start to use this as a leading indicator, and we know that 514 is on. We know it's going to get looked at because it's just come through the last resistance point.
Mm-hmm.
So the market's starting to speak to us now in a way that if we had moving averages, volume indicators, stochastics, they're all noise. But if you just look at the price chart, and you can see this fella starts talking to you. If you look just above 514 on the left there, you're going to see this high here.
Mm-hmm. Yes.
Yeah, 540. Let me mark it off 540. So we'll put 540 on there. So funny old thing, when the market comes through 514, where does it go first? It goes to 540. And we knew that, right? We knew that that was going to happen, but we could also have it. We also kind of knew that, do you know what? There's going to be action there. There's a fire alarm there, and anyone who's got a short position is going to be defending it. Anyone who's got a short-term long position is going to be taking their profit off the table at that point. And that combination of sellers is going to reverse the order flow. Where's the market going to look? Well, funny old thing, having come through 514 as resistance, it's going to retest it as support, right?
Mm-hmm.
So if you weren't long from 460, a good moment to get in would be on the retest of 514 as support.
Okay.
And it makes sense because the market remembers these historically significant numbers. Who cares why? I certainly don't. If I can spot on the left, they're significant to me on the right. So 540, I mean, anyone who reads the blog, I've been banging on about 540 forever. Yeah, you can see that we retest this sort of area as soon as we get through it. But, when the market comes back, having got as high as it can get up at, I think we got to about 710, didn't we, I think? You can spot this is not rocket science. This is just using my eyes, right? The market goes as high as it can. Where do I think it's going to come back to? Well, I think it's going to come back to 540, right? Because this is a hugely significant price point. Let me come up to the daily and I'll show you how significant this bastard is. It's like incredible. So I'm going to make this big. I'm going to make it as fat and massive as I can. 540, there she is, right?
Okay, I see that.
Right, so here's 540.
That's the big fat red line.
540 is, guys. I mean, look at it, it's huge, like boom, 1, 2, 3, 4, 5, 6. 540 was the defining point of this market's breakdown to below 400. And likewise, it's likely to be the defining point of its rise. Most recently, we see 540 tested as resistance here.
Mm-hmm.
Yeah?
Yes.
Back in the beginning of May, no joy, so we come right back down to support. By the way, can you see these price points I drew on the 4-hour chart? Well, I've opened us up now to a daily chart. Can you see how significant they are?
Yes, you did it on the 4-hour chart, like looking at the short term, but it definitely seems like they were historically significant before. So it seems like they were following things that had happened.
Exactly. The market remembers, right? So that's what I'm saying about this, there they are. Can you see the 3 boxes I drew on? Actually, there they were. But you can see that it's significant before that, right?
Yes, I see that very clearly.
The same thing. We can see that 540 is significant. So if we come through 540 to the upside and get turned back by resistance here, then looking back on the daily, interestingly enough, but not surprisingly, you can see that this level was knowable because it had been significant in the past.
Mm-hmm.
So it's going to get really boring, but tell me when I start boring you. But this is hugely significant. You will, because you will not see these points if your charts are covered in the shit of indicators. You won't see them. You've got to get rid of them and just use your eyes. And you'll see that the fact that the market topped out at about 680, 700 on the first leg of this bull run was absolutely knowable if you just look back in history. And the reason for that is that shorter-term traders were looking to take profit where they thought that there might be sellers.
Mm-hmm.
New sellers are coming into the market because they think, hey, listen, the market's gone a long way. There could be a quick buck in a retracement.
Okay.
People that are defending longer-term short positions know that if the market gets above 6, 7, they could either already be in a losing situation, so they are motivated to sell more. And there's a huge amount of selling pressure just waiting for the market to get up there. And that's what turns the market, and you know that ahead of time. It's almost a foregone conclusion. But having done that, do you know what? If you want to climb into this rally, where do you want to be? You want to be at 540 because that is key resistance which we've broken through. What is the market now going to do? Well, it's going to retest it as support.
And it's done that twice. Yes, it's done that twice just at a decent time.
Right. And so, you don't know. Again, if we reduce this sort of discussion to just markets generally, you don't know whether that support is going to hold. You don't know whether 540 is going to make it, but you're going back to that shopping mall analogy that the fire alarm is fucking going to go off there.
Mm-hmm.
Yeah,
and
so
it
in this
did.
particular
It did
case,
go up and price rallied up.
in this particular case, there were more buy orders than sell orders. It's as simple as that, right? And we had one go at it, and then we came back. I thought we'd come right back to it again. We got within $10, right? I think we got as low as 550. And when we can't even get down to retest it, do you know what? More and more sellers come in, that people get more and more confident. Just think about how you feel about the market, and that is essentially what's being reflected, internationally.
Mm-hmm. Okay.
Now, so here we are, here we are, and 540 is held, and off we go to the races, and anyone who came in at 540 has got a great trader's equation. What I mean by that is, let's say that they put their buy order right on 540, where they endured about $2 of heat, which in Bitcoin is like ridiculous. It's tiny.
Yes.
Like most of us, hedge our bets and put our orders about $10 above these levels, and because we want to make sure we get filled.
Yes, we wouldn't have gotten filled the second time.
Right, but the point here is if the market had fallen through 530 and 520, you knew you were wrong, right? So you could
very quickly
bail at that point.
Okay, yes.
Instead of having a really great trade. Now, so that essentially, I mean, in the essence of it, is the methodology that I have used to trade profitably in Forex and now in the Bitcoin market. I simply don't bother my brain with anything else because this is a really strong and repeatable system, and it's creating a trader's equation that I like. Now, that all sounds great, doesn't it? So let's throw our indicators away and do what Wilson says. The problem with this system, this trading methodology actually, is that it takes balls. It brings you right back to the psychology of trading, because you're taking your trades when the market looks ugly. So let's go back to this area of the chart here. You've just watched the market lose what is that 20% of its value, right? And you're putting a limit order. You're putting a limit order into the system against that waterfall of price action which is moving against you, and that is very hard to do. And you just got to be patient with yourself and keep going back to the basics. Keep looking at the way price reacts with these key historical price points and build the confidence to do it. Because
can I stop you right there, Rob? I've got a question. Yeah. So the question is about a platform. You recommended btc.sx. Do they allow you to put in limit trades?
Well, look, if you're an active trader, there are a number of, there are any number of platforms you can use. 500 plus are great. For those of you that want to see a slight reaction, BTSX are fine. Or you can go to a Bitcoin exchange that allows you to place limit orders. So there are a number of options there, but I want to be really careful about recommending one over the other. And you've got to do, your viewers have got to do their homework there.
Okay, so we've got to look at the different platforms and see what kind of abilities they give us.
Yeah, listen, depending on your, the size of your wallet and the size of your appetite, you can be watching the market in real time. But this all comes, trading this way, all comes back to understanding the underlying characteristics of a market rather than starting with the chart. The chart is just a window, and if you can view it that way, you can size up the market as I've explained here. And your eyes are as good as mine. If something was significant in the past, then it's going to be significant in the future. And you can trade on any time scale this way. And I can, if you'd like to, we can come right down in range, and we can do the same thing with Bitcoin or any other market, just to start from scratch.
Okay, that sounds like a nice, interesting thing to do. So you're saying that we could change the time frame on this one to like an hourly chart or something, and still.
Yeah. We'll go even lower again, and you'll see that the principles are just the same. So I'm just stripping off some of the. So what we'll do is we'll come down to 15 minutes. You just don't know. You don't need to know. You don't really need to know what time scale you're on. This is a chart showing you some price action over a period of time. So I used to trade the euro dollar on a 1 minute time scale using exactly the same methodology.
Wow.
So let's start from the left here. So we see that the market makes a low on the left there. And we know, looking at also on the left, that we had a market high in the system here. So, without getting too technical, the market is in a ranging condition. The first time it makes a low, it's already made a high. Then where are we going to be sellers of that? And where are we going to be buyers? Well, look, there's a good buy point when the market comes down and tests the previous low. Here's a good sell point when the market retests a previous high.
Mm-hmm.
When the market breaks above, this resistance level, where does it come back down to? Well, it comes back down to that resistance level to retest it as support. This is all happening on the 15-minute time scale. We have a second retest here, which is absolutely normal. We've now established another some more significant price points up to the north. There we go. So you can see that we've established sort of resistance up here. The market falls back down to retest support. When she goes back, when she climbs above that, funny old thing, she retested our support here. Now we've got a new high, so in this area here. When the market climbs above, I mean, I can just go on and on. Do you see what I'm saying here?
It's just patterns after patterns, like fractals almost.
Exactly. There's nothing going on here for human nature. And you can't see this. It's harder to see these patterns if your chart is full of indicators. But actually, if you give yourself your mind a chance, there's absolutely chimes with how how we all understand that human nature is.
Something becomes more valuable to us when other people say it's so.
Yeah, right. So you stop asking yourself and second guessing whether you should trade or not. If you know that the market is in a ranging condition, right? If the market's not traveling anywhere on the time scale you're looking at, then you can trade both sides of the market. As soon as it's obvious to you that this market is is breaking out into a trend, then you can start using. And this is not a more sophisticated indicator price, but as soon as you can see that you've got enough points to establish a rising trend line, now you can start taking trades off of rising support because it was significant in the past, right? Look at this. So it's a beautiful thing. I mean, but you've got to see that beauty. You have to take away the blinkers, in my opinion, of indicators and just understand how price action is. So here, everyone, in this period of price action here, when the market's ranging, you can see that everyone's really, no one quite knows, right? So
yes.
So high frequency traders are taking the market either way here. But as soon as the market shows...
Are there high-frequency traders in the Bitcoin market? Are there high-frequency traders now?
I don't mean high. I just mean active traders. There's certainly people watching and trading Bitcoin on a 15-minute time scale, for sure. Otherwise, if they weren't, we wouldn't be seeing mass psychology played out so beautifully.
Okay.
Yeah, I mean, so the answer to that is yes, and you're looking at the proof. I mean, the market wouldn't be turning, and having established. Hang on, let me just spell this out for you. So, having established this fulcrum against which the rally begins at point A, right, and then coming down to make a low at B here, you have the technical trader who follows Wilson's methodology has got enough information there to construct a rising support line. Well, if no one were trading on this timescale, or no one were trading this market actively, you wouldn't see the reaction against that line at C, right?
Yes.
That wouldn't happen, but it does.
Yes, no.
And you wouldn't see that reaction at point D. It's the fact that people are watching this market that is telling you that people are trying to get value and achieve a value entry in the context of this rising trend at the cheapest price they can, which is exactly how a market trader or a fish seller or a car salesman or a supermarket or anyone who's selling any or buying anything operates. You get to know your market, and you get in at the best price you can, and you realize profit when you don't think the market can give you any more. And financial trading is no more sophisticated than that. The fact that these trading platforms offer us banks of indicators that frankly do nothing more than muddy the water and undermine our conviction to trade is the business they're in. But it's not the business we're in. The business we're in is achieving the best trader's equation we can as often as we can. And so what we need is if you like, a trading methodology which gives us the ability to see the market as it is, and the conviction to take trades that we know, if we take them, that over time will give us a better than evens chance of winning, and also that we will make more when we win than we will give back to the market when we lose. And it's as simple as that. Everything else is in the execution.
Okay, so with this rising trend line coming now, we are approaching that resistance you spoke of, right? And there's something magical is going to happen.
Right. So okay. So I'm picking up the clue. Let's go back to this is my live. So with regard to the blog, then what you're looking at now is my sort of live chart, which is no different to the one we. Hang on, the damn thing won't scroll at the moment. So you can see on this chart that we've.
So firstly, before you go on, are you like, do you publish ideas and that on your TradingView charts? And are you active on TradingView as well?
Do I do what?
Do you publish your ideas on TradingView?
Look, I have done. For me, it's frankly more an issue of time than anything else. And I probably should, but at the end of the day, it makes sense from a business perspective to draw the traffic to BitScan.
Yes.
Yeah. So that's So I certainly have done in the past.
Okay.
So you can see here that if we zone out, that the market is following a pretty well-defined trend channel, right? So it's following, some very well-defined sloping price points. At the moment, what you're looking at is the interaction, the coincidence of those key sloping indicators or sloping.
Now these trend lines are very interesting to me because when I first saw them, I thought, Rob built these like from the historical price of Bitcoin. So can you just show us how you've actually drawn these trend lines, because they seem like they fit in perfectly. But where did you start them from?
Well, we start to see. I mean, again, you have to go back in time. But all I'm doing is tracing. I'm sizing up the market as I did earlier in a trending basis. So what you're going to find here is that your first line that goes on perhaps is the bottom one. Yeah.
Okay, yes.
And you'll get, and then if you look up and redraw exactly the same sloping line against your highs, more often than not, you're going to find that it's exactly the same, right? So then
Okay,
you're going to
okay.
think, well, that's interesting. So I've got a channel, the upper limit of which is here, where I'm sort of, can you see my pointer moving?
I can see where your mouse is moving, yes.
Yeah? So you
Yeah.
know that the upper limit is here. Now you're going to start looking inside that channel and thinking, okay, have we also got, and you can start to see other price points which are significant on a sloping basis right back down here, and your confirmation comes later, right? They become significant back down the track. Now, I want to make the point that I don't trade any of these.
Sorry, you
As
don't
far as
trade
I'm
any?
concerned, as far as I'm concerned, this is a buyer's market, right? This is a trending market. So the only trades I'm interested in taking are buy trades. Now, I might ease up, I might lighten up a long position where I see coincidence between rising support or resistance line and horizontal support, but I'm never, ever going to zero my position in an uptrend. And this takes me really to one of the if you like the characteristics of the Bitcoin market over and above anything is that most of us who are involved in Bitcoin have this innate belief that this market is is a strong investment and has strong investment potential. So that that makes trading it frankly even easier. So you're right. We're back up at 650 now. We know that 650 is significant. We know that the market didn't manage to get much above 650 at her last attempt, but we also know that that this channel is giving us the room to go way higher than that, right?
Mm-hmm.
So if I come up to a daily chart, you can see that the market can get an awful lot higher than it did last time without reaching out of the top of this channel, right?
Yes.
We know by looking back that 710, around 710 is significant. Getting above 710, and that's always, the horizontal price points are always going to be king here. But we know that on the dynamic basis that this channel has got more to give than that. We could get up as high as 800. Something
Yes.
about all of it. Let's have a look. So yeah, and that's all it's helping me to do, right? All I'm trying to do here is size up the market. So there you go. Again, I say that your eyes are as good as mine, right? So I just put a line on there, which is a resistance line, and I put it on against the bottoms of these candles here. And there's some interaction there, and so I know that coming right, that this is going to be, well, funny old thing. It's that if the market carries on rising at its current rate and gets through 710, which it may or may not. I mean, I just don't know. But if it does, then it wouldn't surprise me to see that we're coincident with 770 as we're reaching the top of this channel, right?
Mm-hmm.
So I can say now that if you're hanging on to a long trade and you don't bail at 710 and we get above 710 and we retest 710 or 650 as a support and it holds and up we go again, and once we climb above 710, we know that the market, there'll be a lot of people in this market looking for 771, 780. And we know that because they can all see what we can see, which is that this level was significant in the past.
Mm-hmm.
So if it was significant in the past, they know that people are going to be taking their money off the table there. They know that there will be people that think the market will reverse from there and that have settled against it. They know that there will be people lightening up there. And all they're looking for is the best moment to reduce their exposure. So that's what we should be doing.
Okay, so we're following the herd in that case, or we just know what's going to happen. We're taking a very educated guess of what's going to happen.
Right, unless there's anyone listening here who has the weight to make the market, i.e. to make the market move, then if you're not following the herd, you're in the wrong game.
So we're taking a contrarian approach to the herd.
Well, not really. I mean, what we're trying to do is we're trying to find the best possible price to trade the market within the confines of the existing context. So
okay, so it just
if we know from
I think it's a coincidence of what your own individual strategy is and then what you're seeing in the market to get in and get out. Like for instance, if you're seeing that 540 is a wholesale place to buy, when the price does go down to 540, and you don't know what's going to happen, but if you do put a buy trade in, then it's going to be wholesale. If it goes south, you're going to know very quickly that you made the wrong decision. But if it does bounce up, you've got the that's the place where you're going to get the wholesale value of it.
Correct. Absolutely right. Absolutely right.
Okay,
yeah,
so the interruption.
So, at the end of the day, there's nothing, I mean, this is not rocket science, but don't underestimate, I'm sure you don't, but, I would caution people against underestimating how difficult this is to do with your own money at stake, because, within the context of whatever picture you're looking at the moment you're considering entering your trade or preparing to trade or executing your trade, it's likely that the market is telling you the exactly opposite of what what you're hoping it will do.
Mm-hmm.
What you tend to find is that once it becomes obvious to the market at large that a key price point is going to get tagged, it moves very, very quickly. Now, what that does is it fools the majority of emotional traders, because their eyes are telling them the market is going to continue doing something which it just ain't going to continue doing. I'm just going to come back in time here to show you what I mean. So I'm on the this is a great point. I mean, it's a great point in case, right? Anyone who saw the market rise above 590 the other week, if you're trading emotionally, you think, well, wait, we just broken through resistance here. We're off.
Mm-hmm.
So if you're a momentum trader, you may well have been, interested in having, and going long at that point. And the market is finally proving to you that she's accelerating to an uptrend. But actually, the opposite happens, right? The market starts falling away there. We see the same thing as time goes by. If the market falls quickly to 590, but then we just stick there. And if you're momentum trading, you're trying to momentum trade that, it's really frustrating because your expectation wasn't having broken through 590. You were going, the market was going a lot lower. Well, in fact, do you see what I mean? This is why momentum trading it becomes so frustrating for people. So this is just recently, right? It's classic. The market falls really quickly here into the 550 area, and then just stops. And that's so frustrating for people. But if they had honed out and looked at the bigger picture, they would have seen why. That's where the order flow is. That's where the fire alarm is going to go off, and it's. Hey, listen, this all comes down to personal preference at the end of the day. But I guess what I'm trying to sell here is the idea that these markets are no different. The Bitcoin market is no different to any market, and the clever money is trying to achieve value. So, all a chart allows you to do is see where those value points in the market are, and you should be trying to do exactly the same thing. So that there is, we're up at let's say historically high levels, but we're up at levels now where the market has struggled to get through. So you might well hold on to the entirety of your long position, having traded long, got into the market at 540, and you may well on this occasion be right. But I can tell you that, it's not a bad idea. It makes absolute sense to lighten up on your long position when you know other people will be selling. And if you play that strategy out over time, it's going to work for you. It may not work every time, and you may miss some, you may come out early in some big moves, but it's a sensible way of trading.
So when you talk about lightening your position, right, does it mean that you're selling some of your Bitcoins for US dollar, or are you on plus 500 or something, you're reducing your position size in your long position?
Yeah, exactly. So if I'm on plus, if I'm actively, so I tend to trade actively on a leveraged account, which so I have a balance in that account of cash, and I will trade it. I will enter and exit the market at these points. Correct.
Okay.
And from an investment perspective, I'm literally just buying Bitcoin. In fact, to my great personal frustration, as I build or pay for the development of BitScan software, right, our software base, I'm having to pay in Bitcoin when I know the market is depressed. So that's really aggravating because I don't want to sell any bloody Bitcoin on an investment basis. There's nothing I can do. The company demands it. So yeah, that's I'm pleased to see it rise because it just gives us more scope to sort of bootstrap.
Yes, exactly. More scope to use more of your Bitcoins to grow.
Yeah, exactly. It's killing me. So look, mate, that's it. I mean, that is the. I apologise if it sounds a little bit sort of. There's not much mystique here. Like I say, the hard thing when you get to brass tacks, the challenge is not in spotting the trade. The challenge is in taking the trade.
Okay, that's very wise words. Do you mind saying it again?
Yeah. When it comes down to it, the challenge here shouldn't be spotting the trade. There are thousands of programs and da-da-da-das that will tell you when the right time to trade is, but you don't need any of them. If you get rid of your indicators and just look at price action, spot where those key reversal points were in the past. It's not difficult to see them. The difficulty is having the courage to trade against them.
And that's the challenge, is to actually trade when your chart is telling you now is a good time to actually get in. I remember the last time we chatted, something you told me really stuck with me. It's you get a feeling in the pit of your stomach, and that's you told me that's the feeling that you go for when you're taking a trade, because it just feels so wrong. But like you said, 60% of the time it turns out right, but you do get that feeling. It's almost like you're going against what the short-term market's telling you, but on the long term, it's like it's telling you another story.
It's so true. If you're feeling happy, if you're thinking to yourself, this is definitely going my way, I'm going to execute now, think again. Because remember, for your trade to get filled, there has to be a perfectly rational and sentient human on the other side of it, thinking exactly the opposite as you. So if you're not feeling sick when you take that trade, you're either not trading at a big enough size, or you're trading at the wrong moment. Unless it means something, unless you're thinking, oh my God, you're standing into danger.
That's a very interesting point you brought up there about there's always someone on the other side of your trade taking the opposite view of you. So you're always trading against someone. It's a zero-sum game, that's right?
Right, but if you think about what I'm saying, you can trace the wisdom through the annals of history. People don't say, fortune favors the brave for nothing, right?
Okay.
It's not. If this were easy, if all it came down to was spotting the moment when the market was going to go your way, if that's all it took to be successful in trading, not only would there'd be no market, or there'd be no trading either.
Yeah, it just seems weird that you're saying that at around 650 levels, price is probably going to go down. You're probably going to sell, but to sell, there must be someone who buys, someone who thinks that at 650 it's a bargain, and they want to buy.
Yeah, listen, I mean, let's be absolutely clear here. I'm not lightening up at 650. That's, I'm trading this on an investment basis, and I'm sitting on a position which went in at 450, and I'm very happy. What I'm saying is that you can see from the price action, here that people are lightening up, right? There is, hang on a moment, so I'll just bring up my chart again so we can see it. So on a 4-hour chart here, let's go down to a 1-hour chart. And you can see here that the market bolts up to 640, 650. You tell me, why has momentum suddenly dried up? Well, I can tell you why it's dried up. It's because the balance of sellers all of a sudden is more or less matching that of buyers, right? That's what's going on there. Mm-hmm. Remember, this is an electronic market. Price only moves because orders cannot be filled without it moving.
Sorry, say that again, please. It's an electronic market.
Yeah, so what's going on here is this electronic market, like any electronic market, the market price only moves in order to fill live orders.
Okay. Yes.
Yeah. That's a really important thing to understand. That is why the price moves. If it only moves because there is an order there that is live in the market, and there aren't enough people on the other side of that order, to actually fill it, to complete it. And that's why the price moves. What you can see here is the market's pretty much all of a sudden, from being in this state of euphoric rallying, it gets to a price point that was historically significant, and the skids come on pretty quickly, right? And that's because there are, the buyers are coming in force, right? And they're matching. Sorry, the sellers are coming in to achieving parity with buyers. Now, whether or not this market's going to move through this price point, at the moment it looks pretty promising, right? On a 1-hour scale, we're above it, and we're now retesting 640 as support. See, if I come down to a 15-minute chart, you can see that again, right? So we can see up here that every time the market drops to retest 644 or 645 as support, more and more buyers coming in. If that continues, so if that continues, sooner or later, the order flow is going to swing back to the buy side, and the market will take another. It will go up another level. And it will start looking at the next level up. So now, with that, we'll start looking up here. We'll start looking at 660. And if we come through 660, then we'll be looking at 710. And off we go. That's just the way it moves.
That's how a trend happens, right? It's just more buyers coming in over time, and there's no sellers to fill those orders, so they just push the prices higher and higher.
Yeah, so when in the blog I'm talking about order flow, that's what I'm talking about. It's simply the fact that one side of this trade has more power, is consistently outgunning the other. But they're all roughly. I don't know how many other ways to put it, but if this market wasn't genuinely in balance, then you'd see a one-way spike that just wouldn't stop.
Mm-hmm. If there weren't any sellers, yes.
So in any market, at any time, there's always tension. When you see these, when you see these big candles, it's just when enough people realise that it's not worth getting in the way of, and there is a better moment to trade. So you get these brief periods where the market is not in balance, but more often than not, it's hugely in balance.
Okay, and when it's in balance, is that when price is consolidating and just not moving much at all?
Yeah, exactly. So the market might be rallying around a fulcrum point, or it might be viewed on a high enough time scale, you could say that this market has broadly been in balance, for periods of time, right? And it all depends, what time scale you're looking at.
Mm-hmm.
You can't down it. So that's a weekly time scale. So you could see that, looking back in time, that throughout on a relative basis, that for most of 2013, the market was in balance, right? There were broadly the same amount of sellers as buyers, and then we all know what happened next.
Yes, exactly. And now there's just more people in the market pushing the price up and down, and that's why it's gyrating a lot more than it did in, like, historically, 2013, 2012, and before. There's
definitely more interest in this market now. You're right. But like I say, you just never. I come back to my first point. You don't know what's going to happen at these. You don't know what's going to happen when the fire alarm goes off, but you know when it is going off, and you can see it in the price action. If this 644 decides to fall, it's going to worry about that, and people will become less confident, and people will start to take their long positions off, or they'll lighten them up. Bears will start to put more sell orders on, and it's that combination of activity that has the potential to move price back down again.
Mm-hmm.
If on the other hand, we try and we can't get through 644 because buyers are coming in, new buyers, additional buyers are coming in, then at a certain point the sellers will give up. They'll stop adding to their positions, they'll start easing up on their sell positions, and that will send the market in the other direction.
Okay.
So, the sense in trading this way over momentum trading is it's treating the market as a market should be treated. It's not. For me, to trade against key price points is a rational way of dealing with something which cannot be known, whereas the opposite of that is either waiting for an indicator which is overlaid on price to tell you later, or it is a momentum approach, which is really an exercise in hope over expectation.
Can we bring it down to the practical, right? Now let's talk about where the market's at the moment. You've identified 650 as a key area, okay? You've seen that it's tested just in the last few minutes, hours. It's tested 650. It's managed to break. It's tested now. It's looking at it as a support. What's your prediction on what would you do in a trade at the moment?
Rather than tell you what I would do, I'll tell you what I am doing, which is holding.
Okay. You probably bought into 540. What if you weren't in the market?
To be honest with you, Karim, if I'm not in the market by now, I would have to be waiting for a retracement. I would never buy into a rally at this stage on this time scale. If I were actively trading this like I used to trade the euro dollar, that would be a different story. I'd be down on the 15-minute time scale, and I would be looking for exactly the same price movements, but against far closer areas of support and far tighter loss stops, and probably smaller trade sizes. Does that make sense?
Yes. Okay. Because this really is really taken off. So for you to get into it at the price that it is now, that's not really good. But you could take advantage of incremental movements in the 15-minute chart using very tight stops, almost like scalping.
Well, right. I mean, again, the time scale doesn't matter as long as you're consistent with it. So this trade was taken. As I said, when I took the trade that I advised down at 450, and we've been waiting for that for that opportunity for months, right? For the market to actually show us it was making a bottom, and so And so I've got no interest in, the market's not shown me anything since that suggests that she wants to break through to the downside and do something else. And for me, that doesn't come until the market breaks below this bottom rising support line. Right. So for me, the bottom of this market at the moment is around 550, 560 at the moment. And unless we trade through the bottom of that, then I'm happy just to watch that trade go. But there's absolutely no reason why you couldn't trade this market on a more active basis and be going long up here. But you'd have to understand that within the overall context of this uptrend, the bargain price was down here, right? Not up here.
Do you mind I'm going to take this call. I'm sorry about this. Hi, it's Edwin. Hello, Mom. Yeah, hold on a sec. I'm sorry, Rob. I'm just going to send a message, okay? I'll be back in a sec. In the room there. Thanks. Sorry about that, Rob. I just needed to send a message.
No problem.
Hello? Oh. Well, Rob, I've taken way too much of your time. It's already 10 past 12 over here. It should be about 10 past 9 p.m. at your place. Maybe in conclusion, we could just talk a bit about what you're doing at BitScan.
Sure. Okay. So, as you probably know, we started BitScan in an attempt to really support and advance, Bitcoin commerce. So, our directory has become the largest on the planet by size and traffic now, which we're quite proud of, and we're just about to expand the scope of our service in order that anyone at all can list and sell products and services for Bitcoin directly from their listing or from BitScan's marketplace, which is fairly huge as far as we're concerned, because we can effectively set somebody up in business in about 10 minutes. All they need is a Bitcoin address. They can dream up a company name and off they go. If they have products or services to sell, they can sell them through BitScan direct from their directory listing, and we can promote them, and we can globally. I mean, it's just the most exciting thing ever, right? We're so excited about it. It's can't believe it, really. And that all goes live in the next few weeks, and we just. I never would have thought it would have been possible for us to have achieved that, and we've achieved it really because of Bitcoin. It's as simple as that. I would never have had the capital to have made that investment in our tech to the extent that I have without Bitcoin. And so for me, there's some karma going on here, right? And we are essentially, I'm ploughing back.
So how's it related to Bitcoin? Did you crowdfund, or it's just that you had Bitcoin when it was really cheap, and now it's a lot more expensive, and is that how you funded it?
Pretty much, yeah. So I took some fairly big positions in Bitcoin early, and I'm now ploughing that profit right back into the market, hopefully for the benefit of the market, which is going to push Bitcoin where I think it needs to be. And I mean, it's all good. It's this huge virtuous circle. Bitcoin has been very good to me, and we're determined to plough that right back into the economy and help other people set up their own enterprises and promote them using leveraging our sort of footprint and social networks in a way that they couldn't hope to achieve on their own. And we're pretty excited about it, to be honest.
Okay, and how does it work? How do you earn from this? Are you earning like a percentage of the sales that people make, or do they pay a monthly fee or a startup fee or something?
So for anyone who just wants to sell on using BitScan, it's absolutely free to list, and it's free to list up to 10 or so products at any one time. That's fine, and we'll take a small percentage of every sale, probably 2%. So that's how that will be priced. And if bigger concerns want to advertise a far greater product offering, then we can achieve that. But we and they will probably wish that they use a third-party payment merchant service provider, in which case we will ask for a subscription. And then we give our merchants several options to promote what they're doing across the BitScan site, but also beyond it through our social networks. So, for example, if you're a startup who wants to trade 10 different sorts of a product, then you can get started for nothing with a free listing and a free shop attached to your listing, and then you can promote through BitScan's marketplace, and you can promote out through BitScan's social network, and it's going to give you leverage and visibility that you couldn't possibly hope to achieve on your own. And that's really that's what excites us, is the ability to give startups the ability to get out there and reduce those marketing costs.
Okay, so it's not just the listing, it's not just the place, but it's actually your highly trafficked. You said it's like the most trafficked Bitcoin marketplace, and leveraging that for a startup to get almost immediate access to customers.
Right. So that, all of a sudden, instead of having a Twitter following of 10, they've got they've got access to a Twitter following of 3.5 grand, and 28, 29, 30,000 views a month, and so they can just leverage that, and it's just helping people get going. And we're hoping that over time we can, by helping people, we can build relationships with them, and it's just kickstart the economy, really.
Well, Rob, thank you so much for your time. Thank you so much for creating BitScan. That's how I first came across you.
No worries,
enjoy the rest of your evening, and thank you so much for helping us. One last thing. If it turns out that the sound quality on this recording is not good enough, would you mind doing this again? I thought it was so valuable, and I did struggle, but I did get through it. But it may not be like good quality for other people. Would you mind?
No, not at all. We have to do it probably at the weekend, but no worries. If I can, mate, it's the least I can do. Really. It took me many years to come to the position, to reach the position that I reached in financial trading. And if I can help other people truncate that journey and their investment, because a lot of people invest a lot of money in their trading. If I can help with that, happy.
I'm on a mission to help people learn trading too. I want to learn trading myself, so yeah, I'm a bit selfish in that. But once again, thank you so much, Rob, and yeah, enjoy the rest of your evening.
Cheers, buddy.
Cheers. Bye.